Welcome everyone. Thanks for joining. I'm Shinran and I'm a CTO for AngelList. Today I'm joined by three of our product leads, Matt, Tammy, and Prad, to talk about common pain points we've seen as venture funds scale and how leveraging software like AngelList can set fund managers up for long-term success. Now, as many of you are already aware, AngelList has historically been focused on serving new and emerging VCs. These are GPs just starting out in their careers. They may not have large budget yet, they may have limited exposure to fund logistics, and perhaps they even have limited time as they wear multiple hats and tend to all the different aspects of running a fund themselves. Solo GPs. Our flagship product simplifies all of the logistics of running a venture fund so that fund managers can spend less time in the weeds of the back office, reconciling information, manual operations, filing forms, dealing with the IRS, bunch of other stuff, and spend more time driving conversations with LPs to raise capital or network with founders to learn more about the companies that they're actually building. AngelList covers all aspects of traditional fund admin, like reporting, distributions, capital calls, as well as many other things on top. Things like tax, entity formation, regulatory filings, legal reviews for portfolio events, the list goes on. At its core, we have a full stack solution. All the data and all the operations are centralized with us so that the fund only has to deal with one vendor, AngelList. This is a key point that has allowed us to establish deep bonds and partnerships with each of our customers as they progress with their careers and go on to raise larger and larger funds. Today, like Avlok mentioned, we manage tens of thousands of different fund vehicles and over $16 billion in assets. If we look back and reflect on how we've actually been able to do this with such a small team, it's really because we've built a lot of our foundations with software, which inherently pushes us to automate by default. We've also made sure that our data is unified, which allows us to seamlessly link data from different workflows together. For example, with AngelList, data collected from the investor onboarding workflow is automatically reconciled and used for other workflows, such as processing LP-specific tax withholding rules during a distribution, or maybe submitting regulatory blue sky filings on behalf of LPs for each fund close, or even helping LPs subscribe to a subsequent fund of yours without having to fill in all the information again. The combination of automation and data unification allows AngelList to support and scale increasingly complex workflows as funds become larger. Now, as the career of a fund manager progresses past that initial new or emerging stage, complexity starts really spiking disproportionately, right? They're managing multiple funds, multiple people on their team, hundreds of LPs, and probably hundreds of legal assets underlying their investments. At this point, they're building a company, an investment company. And with that complexity, previously simple tasks start becoming difficult. We've seen this firsthand with our customers. For example, your LPs may start asking you about their financials or portfolio, and instead of near instant responses, it might take you days or even weeks to get back to them. Or you might try to reconcile your cash flows for your annual audit, but instead of just looking at one or two different places, you end up combing through dozens of various accounts and configurations just to get the data in a single place. Or maybe you're trying to trace down the value of one of your investments, but you end up going through a web of stock splits, warrants being issued, pro forma calculations, just to get it and nail it down. Standardization starts really breaking as your firm starts looking like this slide in front of you, where there's fragmented systems and disconnected data. This complexity forces you to start sacrificing having everyone in one place, right? This causes your data to be crusty, it's unstructured, it ends up all over the place, it's old, it's not live. And each of these portals end up living behind 20 different logins that your team manages day to day. That's the status quo right now for these larger firms. So as a small fund, things are simpler. You can afford to rely on standardization, right? But as a large fund or firm, your challenge is all about scaling custom. Custom workflows, custom terms, custom accounts, custom everything. AngelList has solved for this by designing our system to scale custom by default. This is how we've been serving large funds on our platform. Funds like Village Global, Vanek, Galaxy, or Pantera. And we've now started unbundling and extending different aspects of our platform for increased flexibility and portability while retaining the same unified data layer underneath it all to keep the downstream benefits intact. So now let's walk through some examples of common pain points scaling funds have and hear how software can really help in practice. I'll hand it off to Matt to kick it off with financial management.
Thanks, Shinron. Managing your firm's finances can get quite complicated as you scale. In the current climate of banking uncertainty and high rates, larger firms need to manage their cash well. They may be on multiple banks for redundancy purposes, have a sweep set up into an interest-bearing account, and be in a couple different money market funds. Or maybe they decide to use a line of credit. And that's just for one fund. It's common to set up different entities in different ways. And when you aggregate this across your whole family of entities, this complexity starts to bloat. Your workflows across each of them are in different places and behind different logins. So many large firms end up with a cash management system that looks a lot like this. And in this status quo, things that should be simple become a pain, like giving a new team member access or setting up a new SPV. You may need to move money from 4 different places to get a large deployment out. Even just knowing how much cash you have so you can plan for your next capital call becomes tedious. On AngelList, our unified data layer helps large funds scale with ease. Our treasury software integrates across all of your accounts at different financial institutions, so you can set up, operate, and report all from a single system. All of your banking rails, wires, lines of credit, and your balance reporting, your statements, and your ledgers are aggregated into one command center. You can see here 3 different accounts are all pulled in to a single place. Now, of course, you can drill into any individual account, but it's aggregated at the top level for you nicely. All of this banking data lives in our unified data layer. Now, every large fund has their own strategy, their own teams and workflows. So a standard out-of-the-box solution here just doesn't work. That's why AngelList software is built with a key design principle. You can scale custom. We meet you where you are. You can set up a money market fund, set up on multiple banks, use a number of lines of credit, or you can choose any permutation of those. As shown on the screen, you can configure your cash controls exactly how you need them. You can set up multiple investment team reviews when deploying over 5 million, but then have a separate workflow for money market fund buys and liquidations. You can also have one team manage your fund's cash and a different one for the management company. You configure your accounts and your workflows exactly how you want it, and you can operate it all from one dashboard. Under the hood, all of this data is aggregated on our unified data layer. So you can see our 2 key principles come to life in the way we build product. First, everything works off of our unified data layer. And 2, it's built to help you scale custom. But these principles extend through all of our software, and they actually get more powerful as more of your firm runs on top of it. To make that concrete, a capital call can require a lot of back and forth when conducted on a firm that's scaled to many different systems that don't talk to one another. Reconciling wires from LPs, confirming status with them, and knowing who needs to be followed up with becomes manual and slow and works off of stale data. When you use AngelList, your LP data and your banking data both live in the same unified database, and your workflows are managed from one system. And that's where the magic happens. Each capital call is reconciled automatically as soon as it hits your account. This comes with live status reporting to the admin, to the fund, and to your LPs. Here, Janet is marked as fully funded immediately, and you can configure the workflow to remind Angela and the rest of the unfunded LPs on the capital call due date, if you'd like. So that's one example of the complexity in investor management you encounter as you scale. And I'm going to hand it off to Prod to go into much more detail.
Thanks, Matt. Investor data is at the center of your fundraising, compliance, and money movement workflows. These workflows are important to get right because they require direct input from your investors. And these investors pay everyone's bills, so it's crucial that they have a great experience, especially in this market. But for larger firms, balancing investor experience and the operational requirements that they need is a challenge because they have custom subscription docs, custom data requirements, and a brand that they want investors to remember throughout all their interactions. Historically, fund managers have needed to use separate tools to manage this complexity. A separate data room tool for prospecting, a separate digital subscription tool for onboarding, a separate CRM for marketing, and a separate investor portal for ongoing investor communication. But when you've got a co-investment to close in 48 hours, how do you get everything together across these multiple systems to make the close happen? And how can you give investors a great experience when you have ongoing reporting requirements for investors that are now invested in multiple funds across potentially multiple fund admins? At AngelList, our software is designed to scale custom. This means that large firms are able to configure our data room, digital subscription, and investor portal tools to match their custom requirements and keep all their investor management workflows in one system. And a single system is a great experience for investors because they no longer need separate accounts for different tools. Instead, a single login enables them to both participate in the firm's new funds and receive ongoing communication around existing ones. Additionally, this centralization means that all of the firm's investor data sits within our unified data layer, making it seamless to automatically reconcile capital calls and distributions and automatically request updates from investors as their information goes out of date. That said, the classic operational trade-off with centralized databases like CRMs is having to spend more time making sure the data in the system is actually accurate. We've solved this at scale by capturing accurate investor data from the beginning. Large firms on AngelList send potential investors personalized data rooms when they launch a new fund. From there, investors can subscribe into the fund through a custom digital subscription workflow that eliminates manual data entry that firms were forced to do with their existing paperwork subscription workflows. This means that our unified data layer has accurate investor information from the first time an investor makes an investment with the firm. After the investment is complete, fund managers can distribute investor reports and tax documents to their investors through a branded investor portal on AngelList. And from the same portal, investors can reuse their saved identity and banking information to easily invest into the firm's next fund. Beyond managing these operational requirements, larger firms are always thinking about how to give their investors a better client experience, because happy investors means their next fundraise will be easier. And one of the most annoying things for investors today is needing to send emails for every little action they need to take or portfolio question that they need answered. Because our fund admin partners understand how to operate AngelList's portal, large firms are able to give their investors the agency to manage address updates, transfers, and other transactions directly through the investor portal, without needing to worry how to keep their back office in the loop. And because AngelList's portal sits on top of our unified data layer, investors can get answers to their questions around fund and portfolio performance directly within the portal, through an interface that gives their investors more control around how they can query the dataset. We've been able to provide great visualization layers through our systems to enable this, but the reporting is only as good as the portfolio data that feeds into it. So we've done a lot of work helping large firms organize their portfolio data to make reporting easier, both internally and for their investors. I'm going to hand it off to Tammy to dive deeper into these portfolio management challenges.
Thanks, Parad. At AngelList, we've seen with many of our customers that managing a portfolio becomes increasingly difficult as firms scale in size. Growing firms are not just managing new investments. They're required to report and maintain accurate data for their existing portfolio, processing events such as investment realizations, conversions, and financial changes to each fund across a high volume of portfolio companies. Their systems are often fragmented and comprised of disconnected tools holding critical pieces of data like spreadsheet tracking valuations, emails that store company updates, and maybe even various software tracking deals at different stages. Portfolio management at its core is all about understanding all the previous, current, and future investments for your fund, and being able to confidently tell the story that you want to tell about your investments and your strategy to your LPs. Not having the right tools to do this will ultimately hurt the firm's credibility. Let's illustrate all of this by talking through the top pain points experienced by large firms that we work with and how poor portfolio management has affected their reputation and bottom line. 1. Passing your annual audits with confidence and ease. This involves the ability to back up every decision you've made about your fund, such as how you formed and kept up your valuation strategy. You'll always be asked to provide proof and answers on why you made certain valuation changes. Otherwise, auditors won't sign off and you're asked to use public comps. Audits, when understood deeply, are a great service to you and your LPs. 2. Finding answers with the right details to important questions from LPs. Fundraising becomes more complex as you onboard a wide range of LPs. As the size of your fund increases, you'll be looking to onboard institutional LPs such as family offices, endowments, and foundations. With the changing environment, inquiries from LPs to understand how you invest and make decisions will require more details and understanding your processes and systems. You likely already have all the great answers in your head, but you need to build trust by being able to demonstrate how you think with clear data and communication. 3, and certainly not least, allocating capital towards the right investments. Even if a huge part of your investment making decisions are based on meeting and knowing great founders, it is well known that today approximately 40% of all available funds is earmarked for follow-on investments. At a large firm with institutional LPs, you need to be ready to show your thought process on how you decided to make a follow-on investment or if you decided to pass on it. Alternatively, if your firm does not do any follow-on investments, it's still important to show that you can understand and react to the performance of your portfolio. You need to show that you can monitor your portfolio as it develops and rebalance if you're overweight in one area and not performing as expected. As the size of a fund increases, pivoting and cutting through the noise to change directions becomes significantly harder. Ultimately, at larger venture firms, it's important to recognize that data has a high chance of existing in different places. This is not good enough. It's not ideal for passing audits, it's not ideal for your LPs, and it's not ideal for being able to react quickly to a changing market. At AngelList, our unified data layer not only brings portfolio data together under one system, it also allows fund managers to craft custom workflows on top of that data. This is where it's important to know that the best tools understand how different data works well together. Let's take a look at a tangible example. Here, with the unified data layer, your portfolio data is working intuitively together. You can see the projections of a company's growth, which was taken from their pitch deck, measured against a company's actual performance parsed automatically from company updates sent by the founders. So as you can see, Alto's projected revenue was supposed to be $5 million by a specific date, and on that day, their actual revenue is now $8 million. This is great data you can use in various ways. You may want to start considering whether you'd like to reach out and get into their next round, or you can share this with auditors with ease who are looking to understand why you decided to mark up this company's valuation. Let's take a look at another example since we've been talking a lot about valuation changes. This is a workflow that's notoriously challenging to do well. It's usually not because you don't have a valuation strategy in place, but it's because come time for an annual audit, it becomes very difficult to easily share your work, your proof, your thought process to support your valuation changes. With a massive portfolio, it's important that you focus on doing the hard part, which is actually determining the valuation strategy for each company. Our unified data layer stores all of those valuation changes and makes it easy for you to export it and share it with auditors. These are just some of the ways in which we've been thinking about the intuitive unified data layer that makes taking action easy for portfolio management. With that, thank you. I'm going to pass it back to Shinron to round us out.
Thanks, Tammy. When we zoom out from these pain points and take a look at the big picture, we can see that much of the complexity of running a venture firm is really just due to how all the different functions at the firm are tied together and dependent on each other in some way. When firms are small, this isn't an issue. There's only a few LPs, maybe a single bank account, and a few investments to track. Even if you map out all the dependencies and permutations, there's still not a lot. However, as a fund scales up and there's more LP relationships to maintain, more accounts to open, more portfolio investments, and more tenure to existing investments, complexity starts rising very drastically when the number of possible permutations expand. Fragmentation really becomes inevitable. You naturally end up with more LPs with complex requirements and terms that you have to capture in side letters and track them and refer to them constantly. You might end up with more tenured investments that have very time-sensitive windows to act on and make decisions on. And you might have investment strategies that have to shift and have to adapt as the fund deploys and evaluates its portfolio against our current market conditions. In the world of venture capital, much of the outcome is all about power law. Because of this, fund managers need to be ready and prepared to scale up its ability to handle custom. Funds can't easily say no to or miss out on one of these edge cases. And the status quo of running a firm looks like what we see here in front of us. Disconnected systems operating pretty much in a silo. But at AngelList, it looks like this. AngelList helps large funds tackle these problems, focusing on flexibility and data connectivity. Our unified data layer surrounds everything that we do by connecting, sharing, and reconciling all of the underlying data from features in our product, as well as workflows that fund managers build on top. But for software, there's no longer a need to manage dozens of disparate systems and waste time trying to copy data from one place to another. We also understand very intimately that large funds can't move their entire software stack at once. AngelList software suite is designed to be flexible and incrementally adopted by default. It's easy to get started, and as we demonstrated today, the more that you use, the stronger and more powerful AngelList becomes. In summarizing here, we really believe that over the next decade, software will power all private funds and firms in the market, ranging from tiny microfunds all the way through multi-trillion-dollar funds. AngelList is squarely focused on building software to serve these customers as they scale. And we're excited to follow along our customers' journeys as they grow and as they've done over the last 5-6 years. If any of what we talked about today resonates with you, there's going to be a quick poll after this session for people to learn more. You can also visit our website at angellist.com. Thanks everyone for tuning in.